Hi all, welcome today for a very interesting webinar on Trump accounts and child Roth IRAs. We'll be talking briefly on what these mean and what you could use in terms of offering them for your kids and especially think of long-term wealth planning. Today with me is Dinesh, my co-founder, and Deepa, our tax expert, CPA, who's also based in California. Dinesh, you want to take it forward?
Yeah. Thank you everyone for taking the time for joining. I'm just having an issue with screen sharing. Give me a second to fix it. 1 second.
Dinesh, also share a bit about yourself would be helpful. Share about Rally as well. Yeah, take it.
So thank you everyone for taking the time for joining the call today. And I know there are a few number of people, but a lot of people signed up for this, and we'll be sending the recording. So today we have Deepa, who is a CPA and CA, joining this call, and also Hemant, who is the CEO and co-founder of Rally Tax. And I am one of the founding team member at the Rally Tax. And if you see Rally Tax, what we do here at Rally Tax is we try to optimize your taxes year round. We not just file your taxes like your regular tax filer or TurboTax, but we also aim to help you with tax planning such that you are planning throughout the year, because end of the day, if you're living in state tax cities like California or in New York or in any state which taxes your income, and you fall into a higher income tax bracket, then you are easily ending up paying 50% in your taxes. Like we have been seeing customers who make a lot of money, who work at Coinbase or who work at Google or Apple or Meta, who work very hard, first generation immigrant, first to be an engineer in the family, works very hard and tries to make it to the top. And once they are earning a higher amount of salaries, where it will be a composition of stock and cash salary, cash composition, they're seeing a lot of tax bill and they don't realize it. And this tax season, we have seen customers who come to us to file their taxes and they see that they owe to the IRS $200,000 or $150,000. In fact, last week itself, we've seen a couple who just thought that they have made a lot of money in the year 2025, and they started working with Rally to file their taxes, and suddenly they realize that their tax liability is $120,000. Their employer, when the stocks got vested, the tax withheld was only at 22%, but their effective tax rate is 37%. They have a state tax in California, and also they have a mental health and net investment tax credit, making it more than 50%. So the remaining 30% bracket is the surprise tax bill they had to pay. So Rally, this is where Rally comes into picture, where Rally helps them to plan their taxes quarterly, estimate their liability, and see what can be done through the year so that they would avoid that surprise tax bill. And maybe if they have done proactively, then they would have decreased their taxes from $120,000 to anywhere by 10% to 50%. So that's the proactive tax planning comes into place. And we also provide you with a dedicated CPA whom you can work throughout the year. And Rally provides an AI native tax platform where you are able to schedule a call with the CPA or do the communication with the CPA. Also bring the transparency, right? Because your CPA might be telling you over a WhatsApp or an email, but Rally aims to bring that transparency so that you have a workflow where you are able to manage your tax and tax saving strategies and implement them throughout the year. And coming to today's topic, I'm sure all of you have got excited when you've heard about Trump accounts. It's a good media play, but also everybody were very interested to learn about Trump accounts. And Child Roth IRA is something that we have been helping our customers to implement Child Roth IRA before, in fact, Trump accounts got launched. And we'll also do a side by side comparison of Trump accounts and child Roth IRAs, and then also make you think more again about compounding advantages. If you are starting early, how did that impact on your on your children's final wealth building strategies? And a key caveat where you must have heard from ChatGPT or on your general research that if you have to open a child Roth IRA, then your kids need to have earned income. So we would be talking about how kids legally qualify for a Roth IRA through an earned income. So, most of us, when we go to a financial advisor or when we read books from Warren Buffett or any wealth management advisor, they say start early. Investing is all about starting early. So, the same applies to kids' wealth also. If they start early, then the wealth gap would be less. If they're starting late, then we are eventually creating a wealth gap until and unless they do really well. So, generally, wealthy families have used child investment accounts for decades, but most parents, especially immigrants, first generation Indian immigrants, we don't have Dadaji or Dadiji like in India, where somebody is guiding us about this child Roth or starting early. But usually, the wealthy families in the US have been doing it from a very long time to open child retirement accounts, custodial child Roth IRAs. And starting 3 years earlier can be worth more than doubling your monthly contribution, right? For example, let's assume that from the ages of 7 to 17, you're contributing $7,000 a year. By the time they retire, if you do the math, including the 5% growth, it would turn around 1 million to $1.4 million. So just the 70,000 contributions over 10 years would go to around 1 million to 1.4 million by compounding. So time will always win. So if you're starting early, then that helps you to compound the wealth for your kids. And Trump accounts, usually these are called money account for growth and advancement, called MAGA accounts. Trump famously, everybody started calling them as Trump accounts, but their actual name is money account for growth and advancement, MAGA account. So automatically it invests in broad US stock index funds, very low cost, it has a very low expense ratio, and you can contribute up to $5,000. Either you and your family can contribute up to $5,000. In fact, your employer can also contribute $2,500. So your employer, you, or your family all together can contribute $5,000 a year until the child is turning 18. So you would be able to contribute that, and that money automatically gets invested into different stocks. The if for the newborn babies between 2025 to 2028, government is giving an extra, Treasury Department is giving extra, but how they work is you don't need to have any income to contribute the $5,000. Either you, your family members, or your employer can directly contribute, and it will be a tax deferred investment. If your kids are newborn between 2025 and 2028, then treasury deposit, you will get a treasury deposit of $1,000, and you also get an additional $250 from Dell Family Philanthropy. And this is not included in the part of 5,000. So 5,000 is an extra other than this 1,000 and 250. And seed deposits basically are the $250 and $1,000. $1,000 is for every US born who has a US social security number. It automatically gets credited. But for the Family Philanthropy, there are certain rules that whether you would be able to qualify or not. And that's all with the Trump accounts. And custodial Roth IRA is one of the most powerful long term wealth toolkits for kids. We have been talking about custodial Roth IRA before the Trump accounts have started. And in fact, as I mentioned, that we have helped a lot of our customers in implementing the custodial Roth IRA account. As the name itself says custodian, it is managed by a parent until the child turns 18. Before that, it is managed by a parent, and it is funded by earned income. So the money the child actually worked for, we'll get into how the earned income works. How does the money the child actually worked for, we show it to IRS. we would get into all these details, but at a high level, it's a tax-free growth. So it's like a regular Roth IRA account that you all have, and we all are so fascinated with a Roth IRA account because all the growth is tax-free after your retirement. So same applies to kids also, that this account is a tax-free growth account, and it stays Roth for life, which means that if you are it doesn't get converted to a traditional or a different account, because in Trump accounts, by the time your kid turns 18, it is automatically converted to a traditional IRA account, whereas in custodial Roth it remains as a Roth account for the life. It doesn't get converted. And in 2026, you can contribute up to $7,500 for a custodial Roth IRA account. And you are literally getting 50 plus years of tax free growth using a custodial Roth IRA account. Until now, if you guys have any questions, feel free to post it in the comments so we could cover your questions after the end of the session. Okay. So the child growth IRA is not just for retirement. In case if your children are buying their first house, then they can take out $10,000 without any penalty. Same applies for education expenses and for emergency access also. In fact, in Child Roth IRA, all the contributions you can take out more or less anytime without a penalty, but you will have to pay tax on the growth. So whatever growth that has happened in between, you will need to pay tax on that. And to qualify without penalty free withdrawals, the account must have been open at least 5 plus years to qualify for this criteria. So it's always good to start early. So you always have this provision to not only use it as a retirement tool, but you can use it for a first time home purchase or for education expenses or for emergency access. And if you have to get into differences between custodial Roth IRA account and Trump account, as you see it on the screen, eventually Trump account is going to get converted as a traditional IRA account where the penalties for withdrawal apply. In a traditional IRA account, if you're taking the money out anytime, you have to pay a 10% penalty along with the tax on the growth and the principal. Same way, the Trump account also, you will have to you will pay taxes in the end, whereas custodial Roth, you are having a long-term tax-free wealth over the lifetime. And eligibility for a child Roth IRA, your child must have earned income, whereas in Trump account or MAGA account, you don't have any necessity for your child to have earned income. Everybody is qualified if you are under the age of 18 to open a Trump account. And in Trump account, you have a seed funding. If the kids are being born between 25 to 28, you are automatically getting $1,000 from Treasury, and you also have another $250 from Dell Philanthropy. Whereas in custodial Roth, you will have to feed the account. You don't have any new Trump to contribute to the account. Whereas in tax treatment, it is tax deferred. Whereas in custodial Roth IRA, it's totally tax free growth. So you would be paying taxes in the future on the Trump account whenever you're taking the money out, assuming that when you're taking the money during the retirement, you will have to pay taxes. Whereas in custodial Roth IRA account, you don't need to pay any taxes. And the contribution limits for a Trump account is $5,000 a year, whereas for custodial Roth IRA, the contribution limits is $7,500 in 2026. So, as you all know, the difference between tax deferred and tax free. In tax deferred, you pay taxes later, and in tax free, you pay taxes. In tax free, you never pay taxes on the growth also. But in tax deferred, it's same concept like your 401k and your Roth account. The differences between Trump account and custodial Roth account. And starting early always helps. If you are starting early, like as I'm showing it on the screen, there are two families, family A and family B. Family B started way late or little late. And although the contribution limits are high, the contribution amounts are higher, but still the family that's starting early, family A, would almost reach at the same income by the time you reach the retirement age. So, like any investment advice, like in 401k or general investment advisor advice, which is starting early, changes everything. So, it's always useful if you want to open such accounts to take action immediately versus waiting a couple of years and then taking the action. And the biggest catch when we are talking to users at Rally Tax, we see a lot of users are very interested in this information, but still they are not willing or taking the action very fast because the earned income concept is where it gets a little trickier. So if your kids are at between ages 5 to 7, then you could show organizing books, but usually we see customers with the age of 7 to 17 doing it, who would be counting folding laundry or dishwasher or watering plants or doing household chores, educating the cousins, or doing household activities would be counted as qualified activities for earned income. And IRS, in case of an audit, IRS requires you to show the employment agreement. You will have to run payroll for them for the months that you are paying them. You will have to run the payroll, whichever state you are in. You'll have to run the payroll according to the state laws, generate the pay stubs, and in the year end have to issue a W 2 so that you are following the compliance of earned income logic. And which account is right for your family? Uh, Ideally, if you are looking at an earned income concept and you want a tax free growth, which is long term tax free growth, then custodial Roth IRA is very useful. And if you want to look at getting a seed fund from the Trump account, then still Trump account is useful. Time horizon up to 18 years is Trump account. Once after the 18, it will automatically get converted into a traditional IRA, whereas custodial Roth IRA, initially only you would be opening it as a Roth account. And in terms of tax treatment, Trump account where you are deferring your taxes, whereas in custodial Roth, it's going to be tax free every year. And many families benefit most by using all two accounts together. And next steps, check your eligibility and open a Trump account. And you could also set up a household employment based on creating IRS compliant uh, earned income in terms of employment letter, verification, pay stubs, and W 2. And you can open a custodial Roth IRA account using Fidelity or Charles Schwab, and you can start contributing. Hope this information is helpful. In case you guys need more information, you can set up a one-on-one call with our tax experts. Deepa is also in this call. We'll go over Q&A, but in case you guys want a one-on-one individual session, you can sign up on Rally Tax and you can book a free consultation. And we also help you with filing taxes and also planning your taxes, not just your kids' strategy, but also other strategies too. Thank you. Okay. So I'll be going over question and answers. And you are mentioned that what websites are good to run payroll for kids that cater this population. Uh, You can run your payroll using Gusto or QuickBooks. It's like a regular payroll run, or you could use any online websites, but usually the famous ones are QuickBooks and Gusto. Dedicated to child Roth, there are some companies that charge you subscription, but still, again, payroll would be an additional expense. Just to help you implement the strategy, help you understand this, and then manage the timesheets, they charge you subscription plus payroll. They'll be charging you like any regular payroll company like QuickBooks or Gusto payroll. Siddharth Chavla, can Trump account be converted to a Roth IRA? As of now, the guidelines is a traditional IRA, but we'll have to see what brokerages would be doing, like if there would be new features that would be available. But as of now, the guidelines is traditional IRA, Siddharth. Any more questions from anyone? Happy to answer.
Sorry, just a quick one. I wanted to check, like, if there's a minimum dollar amount that the child needs to earn for the custodial Roth account.
There is no minimal. The maximum is 7,000. There is no minimum wage or anything like that. It could be household LLC setup. Yeah. You
Got it.
can contribute as minimum as you want.
Sounds good. Thank you.
Yeah. Yes, Surya. Both have to be a US citizen and an citizen. So it's we didn't had so many things to cover. It's a very small topic, so I had to cover it faster. But if you guys have any questions, I'm happy to answer thoroughly. 529 with the Trump account. 529 it depends on each state, said. So it depends on which state you are living in, and it has like its own positives and negatives depending upon the state.
Hi Dinesh, this
Hi.
is Surya.
Yeah.
With reference to these two accounts, basically child requires to have a SSN compulsory,
Yes.
and that means child need to be citizen.
Yes. That's the guidelines, but we can still check again for you, depending upon your specific scenario. Did you apply for ITIN?
Yeah, ITIN is there,
Yeah.
but that's where I wanted to check.
Yeah.
Is it only for citizen kids or?
On a high level, most of the cases that we are seeing, people who are doing Trump accounts are citizens' kids only. But we'll still check if there is an ITIN possibility. Then there must be a way out. Deepa, can you confirm on the ITIN? Will they be
Yeah,
eligible through ITIN
yeah.
also?
I'll check on this. Yeah, I need to confirm. Check on this.
Okay, thank you.
Dinesh, this is Luke.
Hi,
So
look.
for the Trump accounts, we can write off those $5,000 from our W-2 income, right? For the year.
Can you repeat again, look?
So for the Trump accounts, right, can we write off those $5,000 from our W-2, like how we do it for 401ks and traditional from payroll?
No, if it is through your employer, it would be tax free. If you are contributing on your own, then still, yeah, you could be, when you're filing taxes, we could set it up.
We take it off, right?
Yeah.
Basically. Okay. All right. And then one more question is, how does the general custodial account, the UTMA or something, differ from this account? That's like a regular brokerage, is it?
From the
Taxable?
custodial Roth?
No, I mean, both Trump and custodial Roth. How is the general custodial accounts, which is like the UTMA? I think there's some account called standard custodial accounts, right? Are they like standard
Yeah, but
brokerage accounts taxable?
yeah, but in custodial Roth, you are showing the earned income for the kid, right? So that's how they're different. So it's an automatic Roth account. You're putting the post-tax dollars here. Whereas Trump accounts, they are designed to be an IRA accounts like a traditional IRA, where initially you get low expense ratio, low investment account cost, and it automatically gets invested. But still, at the age of 18, it's getting converted to a traditional IRA, which is like your typical 401k account right now, where you pay tax if you take out the money during your retirement on the principal and the growth. And also in case in between, if you take out the money, then you need to pay penalty of 10%. The only difference from your regular one versus Trump is the low expense ratio. The investment cost is low, and if it is a newborn baby, then you're getting an additional $1,000.
Okay. No, I was actually more looking not for these two accounts, Dinesh. There is another type of, like, there are three, right? Trump, there is custodial Roth, then there is 529.
Yeah.
But then there is a fourth type of account called custodial UTMA, Uniform Transfers to Minor Act and Uniform Gifts to Minor Act.
Yeah,
How does
that's a,
that?
we'll have to check it, Loknath, on
Okay,
that
okay, okay.
Yeah,
specifically.
so
Yeah, go
UTMA,
ahead,
you can
Deepa.
I would like to speak on this. Yeah. So
Uh-huh.
Loknath, for UTMA, you can like the child can use the investment like the money for anything, for purchasing car also, for anything.
Okay.
As if in 529 it is just used for college expenses or qualified education expenses. That is the main difference. So, yeah.
And how is it from a tax perspective benefit for parents for UTMA? And
So UTMA up to $1,200, it is tax-free earnings. Whatever earning, not the contribution, but the earnings, $1,200 are tax-free for kids.
okay,
$1,200 are tax-free for parents. 12 or 1,300, like I'll have to check again. And
okay, okay,
so up to 2,600, it is tax-free. And after that, you will get a tax on the earnings. Parents will get
okay.
taxed. Yeah.
Got it. Yeah, thanks.
And I would also like to add a point for the sole proprietors and the partners who are the only partners are wife and husband. So if they put their child under 18 years of age on payroll, they don't have to pay social security on the wages. So it's a good idea to like put the children on the payroll so they can avoid the social security and Medicare taxes on the wages.
Yeah. It's like when you are running the payroll, right? Yeah. And said you may ask me, like, can you explain how the funds in the Trump account can be accessed before retirement? As I mentioned, it's a traditional IRA account. And is it more accessible comparatively to custodial Roth? No, in custodial Roth, it's more accessible because you don't have penalty, whereas on at least the contributions, because you're anyways contributing the post-tax dollars, whereas in Trump accounts, you have a penalty. Okay. Anyone else have any questions before we wrap up the call? Thank you, everyone.
I
Go
just have
ahead.
a question. Sorry.
Yeah.
So I have one question. Like, let's say, is there any requirement for Roth IRA for the kids' age? Like, how much old they should be?
7 to 17, usually they start at 5, but
Okay.
the audits and all to keep be on the safer side, it's 7 to 17.
Okay. So before 7, how we can contribute to the Roth IRA? Is it the Trump account that is the safest place to invest, or is it the 5 to 9 where we can do that?
It depends on the state, Sonal. If whatever state that you are living in, depending upon the state, if you have any state tax benefits, it's 5 to 9. But if your kid is still at 5, then you can still start talking to Fidelity and Charles Schwab if they are eligible to open the account. Usually they open and you can start contributing there also.
Okay. How
Usually
about
Roth is
for?
helpful because
Mhm.
you are letting the growth, you are eliminating the tax on the growth, right? So
Right.
whatever money today would become like 10x or 5x in the next 10, 20 years or 40 years, and you're not paying tax on any of that growth.
Mhm.
Whereas on the Trump account, you will have to pay tax on the growth.
Oh, I see. Okay. And how about any like if the child is just 2 or 3 year old?
If the child is 2 or 3, then you cannot show they are having earned
Yeah,
income, right?
yeah,
So
yeah.
you
That's
cannot do that. Yeah. Trump
okay.
might be helpful, Trump account. Yeah.
Okay, sure. Thank you.
Yeah. Thank you all for staying for half an hour in the call. As this is a very brief topic, we kept this session very brief. And if you guys have any questions, feel free to email hello@rally.tax, or you can go on to our website and message on the intercom chat. We're pretty responsive. We respond within 2-3 hours, and happy to help you in case you need help with tax filing also. Thank you.